Portfolio management service or PMS is popular with HNI investors. It's also sold by financial advisors and bankers with a promise of high return. Hi, I'm Dr. Mukesh Jindal of Alpha Capital, and in this short video, I'll tell you what portfolio management service or PMS is, what are the advantages, disadvantages, how they have done in the past few years, and how they have done against the benchmark, whether they have outperformed or underperformed, and which are some of the top performing PMSs. So talking about a portfolio management service, it's a financial product where a PMS companies sell these kind of products. It's similar to mutual fund where you give your money to the PMS companies and they invest on your behalf. Of course, there are few differences in the sense that in mutual fund, you can invest up to 500 rupees minimum investment. In a PMS or portfolio management service, you need at least 50 lakh. In PMS, a demat account is opened in your name and you give the power of attorney to the PMS company to invest in stocks on your behalf. Talking about advantages, one advantage which PMS company says is that they buy 15 to 20 stocks and the portfolio is concentrated and is not as diversified as equity funds where you may have 40 to 50 shares. So this is one advantage which a PMS can bring to the table. There are some disadvantages. One big disadvantage is that, of course, the minimum ticket size is higher, so there is always a concentration risk. Second is that PMS are expensive. They generally charge a fees of 2 to 2.5% plus GST per annum. And some of the PMS also has a profit sharing clause. Depending on the return, they charge from profit some money. Also, when they churn the portfolio, there is a broking cost, which sometimes is high. Like in a mutual fund, the expense is capped at 7 bips for every transaction. In PMS, it can be high. The third disadvantage is that any churn which a PMS does, the tax liability is in your hand. So every time the underlying shares are sold, you have to pay tax. Unlike in mutual fund, what happens in mutual fund is whatever transaction you are doing, the investor doesn't have to pay tax on that. Investor only pays tax when a mutual fund is sold. So looking at this, we analyze the PMSs which are there. There are around 450 PMS. It's a big market. And they manage a lot of assets under management. And we also analyze the performance. Now, I'll take you through the performance. I'll be sharing my screen and I'll show you the top performance. So, my screen is visible. And I'll be also putting a link of this at the, in the YouTube video below. You can go through it later. Now, this shows what is the average performance of different categories of PMS. Like in mutual fund, we have different categories. PMS is also different category, like large cap, mid cap, small cap, multi cap, flexi cap. Now, it shows as on 31st May 2025 end, the 1 month performance was 6.27%. The 6 month performance was on an average minus 3.5%. 1 year was 8%, and 5 year was 28%. Per annum. Of course, the returns are fluctuating. As we can see, the small cap in long term have given higher return of 40% and mid cap has given 27%, mid and small has given 33%. So this is the general average performance of all the PMSs which we tracked. Now, if we look at the benchmarks, these are the normal benchmark. And, if we look at the Nifty 100 last 5 year CAGR is 21%. If you look at the mid cap, the 5 year performance is 33%. Small cap 5 year performance is 36%. We also have micro cap, which has given 49%, and we have 1 year and 1 month performance as well. Now, what viewers will be interested is, are the PMS able to beat the benchmark? So we have another table for this. So it shows different categories and it shows the percentage of PMS which were able to outperform the benchmark. So for example, on an average, in 1 month, 55% of the PMS were able to beat the benchmark. In 1 year, the percentage was 43%. In 5 years, the percentage was only 36%, which means that on an average, only 1/3 of the PMS are able to beat the benchmark. Of course, the fluctuation is higher, like large cap, 41% are able to beat. In small cap, the percentage is slightly higher at 55%. And mid cap it's at 22%. So when I look at the outperformance, the PMS is not as great, in the sense majority of them have not been able to beat the benchmark. And it's also a problem that most of the PMS are not consistent. Now, this doesn't mean that all the PMSs are bad. There are some portfolio managers which do phenomenal job. What investors needs to do is that they need to be selective about the PMS. Like there are some great PMS managers, like I like Jigar Mistry, and I also like Ravi Dharamshi of Value Quest, and I also like Siddharth Bhaiya of Equitas. So depends on the portfolio manager. So investors need to look at who's managing the portfolio, what is the consistency of performance, and what kind of fees are being charged. Preferably you should be going where the fund manager or the portfolio manager has consistently done well, the fees is less. And what important thing investors also need to do is look at the asset allocation. Since the minimum ticket size is 50 lakhs, you should not be investing in PMS if your portfolio is less than 5 crores. Because if you have 5 crore portfolio and if you're investing 50 lakhs, it's 10%, which is still manageable. We don't want that you put majority of your money, let's say 50% or 100% of your money in one PMS with one portfolio manager, because if he underperforms, then the whole portfolio will be dragged down. We need to have enough diversification. So majority of the people don't need the PMSs. Some HNIs, super HNIs who want to invest, they should invest, they can invest, but one has to be very selective with the PMS fund manager selection. The reason being that majority or 2/3 of the PMS in long term are not being able to beat the benchmark. Now, in this page, which I'll be of course putting it in the net, I've put the name of all the top performing PMS, like this is for the large cap, how they have done, and I've compared the performance with the benchmark, the different categories, large and mid cap, small cap, mid and small, multi-cap, flexi-cap. So all the data is there, the AUM, the past performance, and vis-a-vis, the benchmark. So to summarize everything, I think it's a very, very niche product and has not been doing so well in the past. One of the big reasons is the high fees, and also there are very limited good portfolio managers or fund managers. So investors can look at if the portfolio size is more than 5 crores, so that you have properly diversified the investments, and also if the time horizon is long and where the fees is less. Thank you so much. Thanks a lot.